The most popular way to follow the price movements on your trading charts is by using a Japanese candlestick chart, usually just referred to as a candlestick chart or candles. This is a single candle, and there are two main parts to it. We have the candle body, which is the middle rectangle part. Often you'll see it filled with a colour, and we'll discuss that in a little while. And then we have the wicks on either side of the candle body that's just shown as a line extending from it. Now, when we look at a simple line chart, which you'll be familiar with, it's basically providing us with one piece of information for each data point. Usually this is going to be the closing price of that time period. So if this is a 5-minute chart, each point on the line is the closing price after each 5-minute period. So for example, here you can see 12 hours broken up into 5-minute periods on a line chart. But a candlestick provides us with more information for each of these data points. So just like a line chart, it's showing us information for one period. So here's the same data, for example, that we saw before, but this time using candles. Each candle represents 5 minutes, but you can also look at this across all sorts of different time frames. Like here's a 1-hour chart where each candle is a 1-hour period. Here's a daily chart where each candle is 1 day, and so on. So what extra information do we gain with a candle chart? Well, there are 4 main data points. We have the opening price for that period, meaning the price in the market when that period began. We have the closing price for that period, so the price when the period ended, just like on the line chart. Then we also have the highest price during that period and the lowest price during that period. So the wicks are showing us the highest and lowest prices. So combined, it's basically showing us the full range of prices that the market moved through during the period of that specific candle. The opening and closing prices are represented by the top and bottom of the candle body. So then the question is, which one is the opening price and which one is the closing price? Now there are 2 easy ways that we can figure this out. The first one is to look at where that candle is positioned in relation to the previous candle. In most cases, but not necessarily always, the opening price will be the side of the candle body that's closest to the top or bottom of the previous candle. So in this case, we can see that the bottom of the candle is close to the top of the previous candle, so we can pretty much know that this is the opening price of the current candle. But there is an even easier way than that, and we can base it on the color of the candle. Now, you can change these colors to whatever you want them to be inside your charting package, but the most common combination is to have green candles for a bullish move and red candles for bearish moves. So a bullish move means that the closing price was higher than the opening price. So the price went up since the start of that period. Now, since this candle is green, we know it was a bullish move. So this is the opening price and this is the closing price. Now, a bearish move is the opposite. The closing price is lower than the opening price. So the price went down since the start of that period. So since this candle is red, we know that it was a bearish move. Therefore, this is the opening price and this is the closing price. Now, on some occasions, the closing price will be the same as the opening price or almost the same, meaning even though the price may have moved during that period, as represented by the wicks, it finished in the same place that it started, more or less. Now, these will often just have the candle body as a line. So overall with the wicks, it sort of looks like a cross shape. We can call these doji candles. Some people have different names for them, but at Duomo we call them doji candles. Now, there are other charting methods that provide more or different information, sometimes less information, or just display the same information differently. But candlestick charts are a great place to start when you first begin in trading, and they'll be much better than just relying on a line chart. So while you're getting started, stick to the candlestick charts. And now the next thing you need to start learning is how to interpret the information that you gain from the candles so that you can analyze what's happened in the market, what that means, and how that can help you to anticipate what may happen next. And if you want to start learning more of the in-depth side of trading and progress with your learning and start developing into a profitable trader, check out the links below for more free resources.